Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. So, many developments taking place overnight. Global markets have rallied after President Trump announced that Iran had approved a peace deal and had cancelled further military strikes against the regime. Subsequently, he said he's expecting a signing ceremony to take place in Europe this weekend and that the Strait of Hormuz will then reopen. Well, the market reaction was swift, with oil prices, bond yields and the US dollar falling sharply. Wall Street's three major indices registering their biggest daily gains since April 8th, when the US and Iran agreed to a temporary ceasefire. Mind you, Iran has since said that they have not officially agreed to the deal, so that remains uncertain. Nonetheless, the S&P 500 was boosted by the chip makers, with the semiconductor index jumping almost 8%. That's its biggest move in more than a year. Among the notable movers were Micron, ARM Holdings, Marvell Technology, along with Intel and SanDisk. And of the Mag 7 stocks, Tesla rallied, along with Nvidia, while Microsoft and Meta fell. Oracle shares plunged after the company projected capex for fiscal 27 above Wall Street estimates. Adobe raised its annual revenue and profit forecast, but the sudden exit of its CFO added to concerns about the company's strategy, with shares of the Photoshop maker falling around 5% in extended trade. And the rebound in equities comes on the eve of SpaceX's NASDAQ debut, with its IPO having raised a record $75 billion, valuing the company at $1.77 trillion, making Elon Musk's spacecraft manufacturer one of the world's most valuable companies. And investor excitement over the space trade saw Virgin Galactic shares rocket higher, along with York Space Systems. Well, President Trump has said the United States and Iran could sign a peace deal as soon as this weekend, and that would reopen the Strait of Hormuz to shipping. He said the strait will officially open as soon as we sign, which could be soon, very soon, he said, maybe over the weekend in Europe. However, Iran's leadership has said no final decision on agreement has been reached. Its demands include the lifting of international sanctions, the release of billions of dollars in frozen assets, and recognition of its control of the Strait of Hormuz. Meanwhile, the European Central Bank has raised interest rates for the first time in nearly 3 years, hiking by 25 basis points to 2.25%, as it tries to counter inflation before a surge in energy costs triggered by the Iran war spreads more broadly across the Eurozone economy. Meanwhile, US producer price inflation in May jumped from 5.7% year on year to 6.5%. And the World Bank has cut its global growth forecast for 2026 to 2.5% due to the war, and said growth could slow to just 1.3% if energy supply disruptions prove to be more severe than anticipated. Well, US Treasury yields dropped sharply on President Trump's announced peace deal. The US 2-year falling to 4.04%, the 10-year was down to 4.45%. Australian 3-year government bond yields, the futures there, fell to 4.42%, the 10-year down to 4.84%. The US dollar weakened against significantly on that news, down around 0.7% against the Swiss franc, and the Aussie has climbed back up to 70.5 US cents. Well, commodities have moved dramatically on President Trump's announcement, with oil prices plummeting on expectations that the Strait of Hormuz will be reopened. Brent crude losing around 4.5% to close to $89 a barrel. Gold rebounded after hitting its lowest point since November earlier in the session. Spot gold up around 3.5% to $4,210 an ounce. Copper futures up more than 2%. Iron ore falling slightly to 103 US a tonne. And Bitcoin has also rallied on positive investor sentiment to be trading at 63,500 US dollars. So let's get across that latest news, how it's impacting markets. Brad Gastwirth joining us from Circular Technology. Brad, welcome back to you. Have we been here before? Obviously, President Trump saying he's got a deal, the Iranians not so. I guess perhaps all will be revealed over the weekend.
Yeah, Andrew, it seems like Groundhog Day in the summer right now. I mean, clearly we've heard several times of a deal likely going to be signed in the next 48 hours or so. Will it happen? You know, I think it's a 50-50 at this point. The Iran regime already said that they did not agree to the terms. So, you know, what are the terms that Donald Trump, is this again a negotiating tactic that he feels he can force them to sign? I mean, we've seen this a few times now where this has happened. and nothing's gotten signed. So I think, it's clearly, if there is a deal, the markets will rally. It takes off a major risk from the macro front. That being said, I do not think this is a done deal.
Yeah, so to that point then, Brad, do you feel as though markets are perhaps trading on incomplete information?
Yeah, I mean, look, the markets, Andrew, over the last, 36 months have really ignored macro related events. If you look at even, further back 5 years ago with the initial US China tech issues and the different tariffs, then moving on to Russia, Ukraine, then looking at Israel and Gaza, then looking at, this Iran conflict, there's been time and time again that these markets have completely ignored the macro, events. And I still think that there's a lot of uncertainty here coming from the Middle East. Will it be a complete done deal? All it takes is one of these terrorist groups that does not want the deal to do a bombing, and then all of a sudden you'll see fighting from both sides. So I don't think this is, a done deal. Is it a little premature? Possibly. I mean, I'm still quite bullish on the markets. I still think you're going to see significant increases over the next 24 months. That being said, I don't think the conflict over here is over just yet.
Well, that said, of course, the markets, as you say, may be sort of looking past this. Clearly, the focus very much on Wall Street has been the AI trade and, Brad, the space trade. Of course, as we're on the eve of SpaceX debuting on the NASDAQ, how would you describe what you've seen in this IPO?
Yeah, I mean, Andrew, what the trillion or $2 trillion question, right? I mean, it seems to be, well, at least it's being communicated from the news sources that it's 4 times oversubscribed. Now, is that truly accurate? We'll find out tomorrow. If we see a significant pop in this IPO, then we know that it truly was indeed 4 times oversubscribed. It at a 1.75 trillion valuation, there is a lot baked into this company. If you see a traditional IPO pop, I mean, you're looking at, certainly one of the, one of two of the most expensive companies in the world, but with a lot less revenue and a lot more hype. That being said, Musk has proven people wrong over and over again, and this is purely a must trade right now.
Yeah, and of course, so many investors trying to get on that rocket ship too, Brad. In particular, they've opened it up extensively to the retail investor, which is a bit unusual.
Yeah, I mean, it looks like they want to offer a significant portion. Now, are they spinning it that they're opening it up to the retail investor, or is that who is left to invest at a 1.75 trillion valuation? That's the big question. I mean, there's been some commentary about some of the largest mutual fund houses investing or wanting billions of dollars of this IPO, but at a $75 billion raise, they need money elsewhere. And then again, is it because there isn't enough from the institutional side, and that's the reason the retail might be getting a greater share?
Now, Brad, of course, SpaceX, not the only IPO coming to market. Also, we've got OpenAI as well as Anthropic. What do you, I mean, when you particularly look at OpenAI, what's that telling you about the next phase of the AI investment cycle?
Yeah, I mean, it's a great question here, Andrew. I think right now you're looking at, there's significant capital needed for the infrastructure demands that AI is going to need in the near term and the medium term. Clearly, you're seeing the most expensive and the most highly valued private companies now tapping the markets, the public markets, to raise capital. And don't forget, both of these companies just raised enormous amounts of money, 50 to 60 billion plus in the private markets just a few months ago. So, to come to market again so soon to raise another, 50 to 70 billion dollars. I mean, that's astronomical. I do think that there's still significant demand for the trade. Now, all of a sudden, you can get more retail exposure to these assets. But again, there's still a lot of risk at a $1 trillion valuation.
Well, in fact, I see, Brad, that you say that these upcoming AI IPOs could essentially unlock hundreds of billions of dollars of value. What do you mean? What do you see there, particularly with those companies such as Microsoft and Alphabet?
Yeah, I mean, and actually, Andrew, this is a great comment because I don't think many are focusing on this, but let's look at Microsoft specifically. With OpenAI at $1 trillion valuation, Microsoft gains roughly $250 billion from their initial investment. That is astronomical. If you look at Alphabet with their SpaceX and Anthropic investments, you're looking over $200 billion from that for Alphabet. I mean, you're seeing a significant, shareholder unlocked value from these early investments for these mega cap companies. And this is basically free money at this point. And it certainly should be added to the valuation and the market caps. Now it's just a fraction where these companies stand right now. But anytime you look at 200 billion extra, you can't ignore it.
Brad, where are you looking for the next AI winners?
Yeah, I mean, right now we have to see, return on investment, right? I mean, these companies are spending hundreds of billions of dollars in capital expenditures to grow their, infrastructure. You have to see the deals make sense, or else the money will slow up. I mean, I've been saying for the last several years now that, I don't think capex will slow down until you get artificial general or artificial super intelligence, and that's really the smartest of all intelligence. It's smarter than a human being, and when we hit that level maybe you see capex slow down slightly. That being said, we're still at these early innings, and if you look at the next iteration of robotics really taking place, the amount of data explosion is serious, and I think you're still just not even near the top of the iceberg in terms of where this thing can go from a trade perspective.
Brad, so much to look for on markets at the moment. Thanks for getting us across it. Thanks for joining us from Circular Technology.
Thanks, Andrew.
Okay, so let's then take a look at where we're likely to begin our session on this Friday. Look at that, 1.7% higher on the S&P ASX 200 futures. Essentially, the lead in there from global markets off the back of that news from President Trump, who maintains that a deal is close, perhaps will be signed on the weekend, although Iran has said don't get your hopes up. Essentially, they're still a little reticent just about signing on the dotted line clearly. So nonetheless, we have seen, as I mentioned, those particularly commodity prices move dramatically. So that's going to be interesting, taking a look at the resources sector locally to see, in particular, such as gold stocks, but also the energy sector as well, as where they're going to move today. We're going to get across that in just a moment for the open. Join us then.